Good morning and welcome to BloombergQuint, India's first digital live streaming business news service. You're watching Indian Open. I'm Neeraj Shah. Good morning, Ira.
Good morning, Neeraj, and a very good morning to all of our viewers. Let's get you the headlines this morning. The Reserve Bank of India once again warns banks about the possible misuse of the SWIFT system, also sets up a 5-member committee to look into large bad loan divergences and frauds. Arun Jaitley questions the role of auditors in the 11,000 crore PNB fraud, says the government will chase down anyone who cheats the banking system. SEBI allows National Stock Exchange and the BSE to launch cross-currency derivatives almost 2 years after the Reserve Bank of India permitted them, paving the way for hedging of foreign exposure. Reliance Industries makes its third investment in the entertainment space, acquires 5% stake in Eros PLC, will also invest another 500 crore to develop content.
Well, let's take a look at the trade setup for the day. Seems like we'll start off on a slightly positive note, which is not bad. Remember, we keep on bobbing in and around this 10,400 mark, which is the 100 moving average. However, the late selling in trade yesterday probably confirms this sell-on rally template that we now seem to have come into. Almost every rally is being sold into, not that dips are being bought into, except for these last 2 or 3 sessions when we tried to convert around this 10,400 mark. Nifty Bank closed lower. It's about 220 odd points from a level which it has not tested in the last 1 year in terms of moving averages. So keep that at the back of your mind. Thankfully, we're starting off well today, but let's wait and watch if that stays on or whether we again see a bit of a bout of selling after opening higher. That's actually consistently been the pattern over the last few days. We may have started off in the green, but tend to move down almost immediately. Let's see if that's the case in today's session or no. Yesterday, one heartening piece was that the broader markets paused the slide. They were correcting almost 1% apiece for the last 3 or 4 sessions. In yesterday's session, the mid caps and the small caps didn't fall too much. They're likely to move in line with the large caps. So because the large caps will start off well today, we'll probably seeing some bit of positive uptick in the mid cap and the small cap indices as well. And almost every trader worth his salt in the last 2 sessions has said that there's an outside chance, and a strong one at that, of there being some bout of short covering in the PSU banks in the next 2 days because the expiry is around the corner as well. Let's wait and watch, keeping keen eye out on the rolls as well, but maybe some bit of profit booking on the shorts could well be at play here. I think yesterday, and I'm sure Ira will talk a lot more about it, but the dollar strength on the INR was showing as well. Ira, the lowest that the currency is traded in over 3 months, and that was a telling move yesterday. I'm sure you're going to talk more about it, but
I mean, there were some interesting aspects. I think currency being at a 3-month low is not a huge deal, according to me, but there are some interesting aspects of the trade which we'll just talk about once you're done with your trade setup.
Okay, no, so almost done. Just a few stocks that I want to mark before we move on to the bigger stories on First Word. Firstly, Eros International Media. Reliance is going to buy 5% stake in Eros International PLC, which is the global parent. So this puts Reliance also in focus, but it's a small investment from Reliance size, but could well make Eros International a stock that could be excited in the session today. Fortis was interesting. Consistently, Edelweiss has been the seller, but yesterday, SocGen has bought about 1.5% at about 142, 143. The stock ended up 5% higher. Let's wait and watch what happens in the session today. I thought in terms of numbers, while we've ended the earnings season fair and square, a couple of late numbers that came out. Mahindra CIE was an interesting one. Revenues up 40%, EBITDA up 72%. Margins expanded 200 basis points on that base. That's a pretty steep margin expansion as well for Mahindra CIE. Let's wait and watch if there are some positive thoughts out there or positive cues that come in from Mahindra CIE in the session today.
All right, bonds and currencies, actually there's interesting stuff happening on both markets, so I'm going to flag off both. I'll start with bonds. So you saw the 10-year yield yesterday, which came back from a Monday holiday trade higher. Some of that in response to the fact the US 10-year had moved up towards the 290 mark and has been hovering around that. So the Indian 10-year bond, you saw that moving to about 767. The point to note here is that no matter what gets announced, so for instance, the government announced a revised number for their borrowing. Some of the auctions got cancelled. The RBI came out with a liquidity, assuring statement. But no matter what gets announced, the bond yield, after a short correction, seems to start moving and trending higher as well. So all in all, you're seeing pressure on the upside on the 10-year bond yield. That continues. Other things have happened as well. So yesterday, for instance, you had a state bond auction. And for the first time in a while, you didn't see the state bond auction get fully subscribed. So some of the pressure that you saw on the central government bond auctions, which forced them to withdraw some of their auctions. You are seeing the same thing coming in on the state bond auctions as well. Yields on the state bonds now above 8.25 for the 10-year, just broadly saying, of course, different yields, slightly different yields for different states, but more or less above 8.25, which is telling you that the overall yield environment is now tightening. Note on liquidity, because liquidity has again tightened, not if you're looking at the call money market rate, because that is still at 6%. But last week, unexpectedly, liquidity was in deficit mode, which explains why about 10 days back, the RBI had come out with a statement saying that we are sure that we will put in liquidity as and when required. The one thing that is once again starting to become notable is that currency in circulation is starting to rise again. So the last couple of weeks, you've seen slightly higher than expected jumps in currency in circulation, and that obviously will add to the tightness in liquidity. So that's some of the things that is happening on the bond side. On the currency side, again, there were some interesting aspects of trade yesterday. So you saw the rupee weaken again. It came back from a holiday, but it took a sharp knock right at open, and then it traded weak pretty much throughout the day. It was the worst performer in Asia. So yes, there was an aspect of overall EM currency weakness, but for a 0.5% cut on the IDR, that's the Indonesian rupiah, or the Korean won, the Indian rupee was down about 0.8% or so. So it was an underperformer yesterday. The macro issues are, of course, higher global yields, plus the fact that we are still reacting to a slightly wider than expected trade deficit. But traders said that they were seeing slightly higher import demand. Now, speculation, and this is entirely speculation because no one can confirm this, was that there's some nervousness over the rollover of buyer's credit following the PNB scam. So if there is a section of the market which feels that their buyer's credit may either not get rolled over or may get rolled over at higher rates, then they will be buying in the spot market to actually make good on that. But this is entirely talk. It could just be a sentiment hit. I spoke to one very senior banker late yesterday evening, and he said that I refuse to believe that one fraud incident will take away an instrument which has existed for decades. But, there could be a nervousness that would be there in the market in the interim.
Something like this has happened in the recent past? I mean, non-roller of buyer's credit, it's not something that we've heard too often, right?
No, I mean, it depends from company to company, right? So, I mean,
sure.
Yeah. So, if there are certain companies who feel they don't have the kind of underlying that they should, because people will obviously tighten scrutiny of an instrument like this after a scam like this comes up. So, if they feel that, okay, I don't, as somebody said, sorry to use the word, if there is some dodgy, credits out there, people will want to just, pay them back because they feel that maybe they will not get rolled over, there'll be too much scrutiny. Or if rates start to rise and you can't handle that increased pressure, then you may start to buy dollars in the spot market and pay back or prepare to pay back. Some of it is also that importers are not entirely hedged, so it could be just purchases because they're not entirely hedged. I think one of the people, Mr. K. Harihar of First Strand, who we were talking to yesterday afternoon, said that the forward premia has not gone up, which again suggests that the pressure is largely on the spot market for some reason and not just general upside that you would likely to see or the downside you'd likely to see in the rupee.
Interesting times. Okay, so, well, that's the sum and substance of what the trade setup is looking like, both for the equity markets and the bond and the currency markets. Today on First Word, though, we speak to former RBI Deputy Governor H.R. Khan on the RBI once again warning banks about the SWIFT system, also forming a committee to look into the growing bad loan divergences, frauds and bank audits. The SR Steel resolution process may be back to square one with legal advisors raising concerns over both the final bidders and why Reliance Jio stands to gain the most because Reliance Industries has struck or will strike or has struck a deal with Eros International PLC.
All right, I'll pick up on the first of those topics, and this is the Reserve Bank of India's press release that came in yesterday. There were actually two parts to that press release. I'm not sure why they clubbed it into one, but there were two slightly different issues, and there is an interconnect as well. The first thing they said was that, look, we have been warning banks on things that could go wrong with this SWIFT messaging system. We have given 3 warnings in the recent past. Banks have not adhered to what we had recommended that they do. So we are once again reiterating our confidential warning and asking them to strengthen their SWIFT system. This, of course, comes in light of what has been discovered at PNB, because it seems that one of the big lacunae in all of this was the fact that the SWIFT system was not talking to the core banking system and allowed such a large fraud to build up. The second aspect, of course, is a committee, which I'll get to in a minute. But Mr. H.R. Khan, former Deputy Governor of the Reserve Bank of India, is with us on the phone line. Good morning, Mr. Khan. Thank you so much for taking an early morning call. This is Ira here.
Morning.
Mr. Khan, so, the RBI is saying that, look, we have been telling banks to do this. My only question, Mr. Khan, is that could there not be a proper timeline have been put in place if the RBI knew that this SWIFT system was vulnerable? Could banks not have been, like in other cases, been forced to strengthen this system, sir?
I'm sure there would have been some timeline, and this is such an important thing. Bank management themselves also should have ensured that it is done in a timely fashion. This integration of SWIFT to CBS is a tedious process, but while the integration is happening and it should happen in quick time, a lot of testing has to be done, system has to be debugged, a lot of trial runs have to be done. But in the meantime, what should have been done, possibly was done but not done adequately, was to put compensatory controls in a very effective manner, so that whenever it is not integrated, you have other parallel controls which ensures that such type of things don't happen. Perhaps there has been some slackness in regard to those compensatory controls.
Sir, in yesterday's statement, the RBI said that they've reiterated their confidential instructions, and we understand why they can't put those out in public domain. But apart from the linkage to the core banking, sir, is there anything to your mind regarding the SWIFT system that needs to be tackled, sir?
No, SWIFT also, globally there have been issues, particularly after the Bangladesh incident. Few questions have been asked about SWIFT, and SWIFT themselves are upgrading their own system. But we are also a stakeholder in SWIFT. Banks own it, even RBI has also a stake in SWIFT. I think there is also a need to have a thorough check of SWIFT system. And SWIFT also have their own system of alerting members, but I think that also needs to be strengthened. So it is not only that PNB, there have been other instances where SWIFT system has been compromised. One doesn't doubt the robustness of that system, but the peripheral connectivity of the other systems and whether there can be misuse of that, I think there is need for a global surveillance sort of thing, because SWIFT is also subject to surveillance by some of the regulators. And there is a supervisory college which looks into how the system SWIFT is regulated. I think they should also look at how the system, how robust and effective is the SWIFT system. I think that should also be looked at.
Sure. So the other thing that they said as part of yesterday's press release is that they've set up a committee to look at asset classification divergences, provisioning in the credit portfolio of banks, and rising instance of fraud. Sir, is this an accounting issue to your mind? Is that why they have set up?
I was a bit confused because here the issue was Operation Risk.
Exactly.
So this committee, but that said, the divergence is a major issue which has been coming for the last 2-3 years, because of a variety of reasons. And very important reasons are that perhaps the auditors and RBI are not on the same page, and there need to be some bridge building between the perception of auditing community and the regulator. And there have been some perception that the regulator also has been changing the norms or reinterpreting the norms. I think that perception needs to be removed. I think this is a very welcome step so far as the divergence part is concerned. And Mr. Malkan is such a person with experience and expertise. He will bring a lot of value and a lot of pragmatic suggestions. I think that's a good step. But I would say they are also possibly looking at the incidence of frauds, which is the other part of the committee. I don't know the full details of the terms of reference, but I would say in the meantime, just like we did asset quality review in main bank, we should do operation risk audit of most banks and give the information to this committee to further strengthen. In a sort of in a mission-like mode, we should do the operation risk audit of all the banks, and a template should be created to see whether RBI instructions have been properly followed, what is the system of follow-up of instructions. There is a committee of the board which looks at internal control and frauds. How effective are those committees? There is a central fraud registry system and fraud reporting system, red flagging of system, whether those systems are effectively functioning, and the IT systems, how they are integrated or not integrated, and what are the controls, including compensatory controls. There are other systems which are not also integrated to CBS. So how those controls are put in place to see that such things don't happen. So I would recommend a quick time-bound operation risk audit of all the banks.
That's a great suggestion, Mr. Khan. Thank you so much for joining us this morning. And hopefully the RBI will follow up on that operation risk audit, sort of on the lines of the asset quality review Mr. Khan suggests would be warranted given everything that has come to light.
I'll just add one small point, Ira.
Yes, sir.
We have also seen quite a few issues relating to foreign exchange management contraventions. I think for a long time we had a system of important branches being subjected to foreign exchange inspection from the FEMA angle. I think time has come to revive those audit of those important foreign exchange branches to see that those foreign exchange regulations are followed, because quite a few irregularities of frauds have happened. Last year we had Bank of Baroda, this year we have PNB, and there have been stray cases. So I think there is also need to look at whether we should again revive the audit of foreign exchange transactions at critical branches.
Sorry, sir, you are talking in the context that some of the foreign branches may not have done due diligence on these LOUs, sir?
No, I'm talking of not only that. I'm mostly talking about, for example, you had that problem in Bank of Baroda a year before.
Yes, sir.
Remittances happened, and this how LOUs are issued and how the guidelines are followed, whether it is a pearl or precious stone, whether letter of undertaking is properly issued, and whether there is some compliance with the FEMA requirements, particularly in the field of trade, which is an open mine for a lot of malpractices.
All right, Mr. Khan, thank you for that suggestion. Thank you for joining us as well for that quick conversation, Mr. Khan, making two important suggestions, an operational risk audit and also looking at the foreign branches and foreign exchange. And, he has, for a large part of his career, dealt with that part of banking, so he knows best.
Yeah, hope somebody's listening to this. I guess somebody listened to stories that we put out on BloombergQuint earlier as well, because the Essar Steel resolution process may have hit a deadlock. Sources have told Bloomberg News that advisors to the deal are said to have rejected Motilal and ArcelorMittal's bids. Anthony, who broke the story, gets us the details in this report.
A consultancy firm and a law firm who has been appointed to evaluate the bids for Essar Steel has raised serious concerns regarding the eligibility of those bidders who have come forward. As you know, two consortium, one led by ArcelorMittal and another by New Metal, backed by VTB, has made bids for this company. Right now, both these bids have been deemed as disqualified by the assessors or the evaluators, saying that this violates some of the ground rules which has been set by NCLT and the government regarding the eligibility of the borrowers. Now, what remains to be seen is whether the committee of creditors, when they meet tomorrow or day after, how they deal with these concerns which has been raised regarding the eligibility of these bidders, and also whether the resolution professional will take this into account when the company is eventually being liquidated or sold off.
Right, I think one doesn't know how this will end, because I think all the stories are saying that this is what the advisors have said. The final call, I guess, will be taken by the resolution professional and the creditors committee. But it's important to just wonder what happens if they do get rejected. If both the bids do get rejected, what happens? You go back on the bidding table. I mean, you are allowed to call for rebids, but so far, at least, JSW Sajjan told Menka Doshi in an interview on the sidelines of Davos that he's not looking at SR. He was looking at the Bhushan and the Monnet assets. So if he's not in the play, I don't know if Tata Steel would want to be in the play, having already made fairly aggressive bid for the two Bhushan assets. Then what happens? This is one of the largest steel operations in the country. Yeah,
and some of the largest bidders are either already paying top dollar for assets that they want to bid, and the others are not in the play or have been disqualified. Now, the question only remains that I don't know, just from a demand-supply perspective, if there is an asset which is not finding takers, assuming that Tata Steel and JSW do not bid for it, then does some other global major think that, hey, this might be a good play because it could be available at a price which would be a lot more reasonable? That's the question. And then whether JSW revisits this whole space, simply because it had shown fair amount of interest for Bhushan, which is a lost out to. Does it now make a bid for SR, even though the earlier call was that they do not want to?
Lots of possibilities. And then, of course, the third one, which Menka was pointing out when we were chatting about this informally yesterday, is that I'm sure these guys will go to court and challenge, you know, the RP or the COC, saying that they are not eligible. So whether it's New Metal or it's Arcelor, it's possible that they would want to go to court to challenge this ineligibility, in which case the timelines go completely out of whack in a large case, in one of the large cases.
True, but I'm just wondering, Ida, I mean, when the bids first got put into place, from then I remember, even if not officially, but the newsroom chatter across newsrooms would have been that how is it that these two will eventually get to go? I mean, you know, expert after expert has said that the New Metal bid at least was just not in the right spirit. I mean, whether or not legally it is challenged or no, it's a separate thing altogether, right? So
yeah, I think you're right. It's a question of you know, spirit of the law versus letter of the law. So, you know, to all of us who are not law experts, it seems like it's against the spirit of the law. But, you know, at the end of the day, the law is about, is a specific document. It's about the letter of the law as well.
Yeah.
So if they can prove that they fit in to the eligible set of bidders within, you know, the existing law, perhaps they, you know, have a challenge to make at least. Eventually what the courts decide, who knows. But I think it's interesting that, you know, the within the steel, I think the steel guys were the most, you know, watched, the steel assets were the most watched. So within that, you will see at least one complicated case.
Yeah, well, let's wait and watch how this shapes up. But I'll tell you what, the digital content space is shaping up to be an interesting battle. After establishing the leadership in the oil and gas industry and disrupting the telecom market, Mukesh Ambani is now expanding his media empire for sure. Reliance has announced the acquisition of almost 5% stake in Eros International PLC, the international arm, Reliance Media and Entertainment arm, and Eros will jointly produce and consolidate content across the industry as well. Somit is standing by with the contours of the deal. And Somit, this may not mean a big deal revenue-wise for Reliance Industries overall, but it's surely one definitive step forward towards establishing dominance in the content creation space.
Yes, it might be, because they are because they're also looking to beef up content for their Jio app. So there are two parts to this deal, so I'll get to those. So first, they'll be investing around 325 crore rupees, that is $48.75 million US, in the US listed Eros PLC. Also, they'll be putting it 500 crore rupees, that is close to $75 million US, in a corpus in which Eros will also be putting in money. So for this 325 crore rupees investment, they'll be buying in around 32.5 lakh equity shares of Eros PLC at $15 per share. And now this is at a premium of 18% to Friday's closing price of Eros PLC, because Monday was shut. And they'll get around 5% stake. Now, there are various regulatory approvals that they will have to take for this. Along with that, they'll also need regulatory approval from Reserve Bank of India, and they're expecting this deal to complete within 3 months. Now, this second investment that is there of 500 crore rupees. Now, this you can go to the previous plate that shows the breakup of 325 crore rupees and 500 crore rupees. Yeah. So this 500 crore rupees, they'll be putting it in a corpus along with Eros International Media, which is the Indian listed entity. And this will be used for acquiring and producing Indian films and digital contents across all languages.
Sorry, can you repeat that?
They'll be putting in this 500 crore rupees in a corpus which will be used to produce and acquire Indian films and other digital contents across all languages in India.
Along with Eros International?
So Eros International Media will be putting in another 500 crore rupees, and they are putting in 500 crore rupees. I'll get to that later. So if you see, this is the third investment done by Reliance Industries in the media In 2014, they bought in Network 18 for around close to 4,000 crore rupees. Recently, that is 7 months back, they invested 413 crore rupees in Balaji Telefilms for a 24.9% stake. And now they have invested around 825 crore rupees with Eros Group. And they have also appointed a new person to head these investments now. So they have inducted Jyoti Deshpande. Now, she was the MD and CEO of Eros for the last 17 years and now will be heading the Reliance Industries media and entertainment business as the president.
Wow. Okay. And, you know, I have two more questions, Somit. But firstly, what will Eros International Media, the Indian listed arm, now get from all of this?
So according to the information available to us right now, as of now, the Indian listed entity, that is Eros International Media, will not be getting anything other than the monetary, at least in the monetary benefits, nothing in that way. So it is the Eros PLC which will be getting the money, that is 325 crore rupees, and they might look to invest that in Eros International Media, because the Indian subsidiary also will be putting in 500 crore rupees in that corpus, thereby creating a corpus of close to 1,000 crore rupees, which will be invested in Indian films and digital contents. So they might look to invest that. We don't know about it. So we'll have to wait and watch how that works out. So let's see what Eros has to offer to Reliance right now. So Eros has around more than 2,000 films in its library. Along with that, it has rights to more than 10,000 films. And also it has plans to come up with more 35 movies over FY 18 to 20. So this is what it has, other than its distribution and marketing reach that Eros has in the industry. So let's see what the analysts are saying right now. This investment, according to analysts, will strengthen Reliance Industries' digital content and entertainment offering. And Eros has a good distribution reach, not only in India, but also in the foreign market. So that will also aid this deal, according to the brokerages. And lastly, this deal will beef up Jio app's digital content. So that is important for Reliance and Reliance Jio's app. So that will also beef up their digital content in the app industry.
Yeah. Well, interesting. Sumit, thanks for that. The only thing is, the way I look at it is that both Eros, the app that is already existing, right, and old Balaji, and after their initial big hurrah that it did, and you know, I may be mistaken here, but I don't think they've really created waves. Eros, for a matter of fact, I know the numbers out there in subscription and otherwise haven't really taken.
The thing is, Eros has a partnership with all the telecom companies. It's not only Reliance, it has partnership with Vodafone, Idea and Airtel. Yeah. So I think so there might be something exclusive that Jio would be getting out of this, or else the deal wouldn't have made sense for them.
Yeah, sure. I mean, I'm sure they know what they're doing. I'm just trying to put together the pieces that Balaji's been a pioneer in content creation, and therefore that deal was a no-brainer. Eros is an interesting one. Maybe Eros International PLC and the content creation that they do might help in the pipe for Reliance in the Jio app. But it's surely establishing Mukesh Ambani's dominance in this space as well.
In media, right? I mean, it's now spread across deals, as Sumit just pointed out.
Yeah, that's interesting. Thanks, Sumit. Thanks for putting this into perspective. Let's see the impact on Eros International Media, the listed stock in India as well. We'll be watching out for that stock in the session today. But that's all that we have on First Word, at least for the day. But lots more lined up on the show. We'll discuss market valuations and where do we go from here with Chakri Lokapriya of TCG Asset Management. Get an analyst view on cost pressures and the outlook on the cement industry. Murtuza Arsiwalla of Kotak Institutional Equities will be joining us to talk about that. And post the NASSCOM guidance, can the IT industry go out and do much better in 2018-19? We ask Anand Deshpande of Persistent Systems. All of that coming up a bit later on the show. But for now, we take a break, come back with full tilt towards the day's trade on the other side.
आइसक्रीम? ये है डबल आनंद। पहला आनंद पॉलिसी टर्म के अंत पर मैच्योरिटी क्लेम का पूरा भुगतान, और दूसरा आपके अपनों के लिए लाइफ कवर की पूरी रकम बिना किसी प्रीमियम के। LIC न्यू जीवन आनंद, आनंद ही आनंद।
सॉरी, आई एम लेट। क्या हुआ?
कुछ नहीं यार, जस्ट वर्किंग ऑन माई एक्सपेंशन प्लान।
फंडिंग का चक्कर।
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख। ला।
अरे।
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल।
हाँ।
NSE Emerge, साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
मीट मिसेस मेहता। इन्होंने नो रूम रेंट कैपिंग वाला आईसीआईसीआई लॉम्बार्ड कंप्लीट हेल्थ इंश्योरेंस नहीं लिया और जा पहुंची ब्रोकर बबलू के बिल्कुल बराबर में।
बर्बाद कर इसके। ए स्टील का बेच जल्दी जल्दी। मैं इधर ने हरणिया का इलाज कराने आया हूँ। अगर तूने ये शेर नहीं बेचा ने तो मेरे को बाईपास कराना पड़ेगा। अरे स्टील आउट, सीमेंट ये पेमेंट नहीं हवे, सीमेंट डूबा। तेरे को ब्रोकर किसने बनाया हवे? अरे तेरे
रूम शेयरिंग की टेंशन नहीं, इंश्योरेंस लीजिए। आईसीआईसीआई लॉम्बार्ड कंप्लीट हेल्थ इंश्योरेंस देता है हेल्थ कवर के साथ साथ नो रूम रेंट कैपिंग का बेनिफिट भी, ताकि आपको मिले अपनी मर्जी का रूम और सुकून। आईसीआईसीआई लॉम्बार्ड कंप्लीट हेल्थ इंश्योरेंस, टेंशन नहीं, इंश्योरेंस लीजिए।
व्हाइट शर्ट्स कितने प्लेन और सिंपल। फॉग सेंट प्लेन और सिंपल व्हाइट शर्ट को बना दे स्पेशल और फैशनेबल। फॉग सेंट, न्यू फैशन वेयर फॉर मेन।
Welcome back. You're watching Indian Open on BloombergQuint. Let's see how the Asian markets have panned out at this point of time. The Japanese markets seem to be doing well. They were up almost 0.6%. The Hong Kong markets are up almost close to 1%. So the cues coming in from Asia at this point of time seem to be decent. Let's also take a look at what's happening as far as the SGX Nifty is concerned. And that has actually managed to inch up much higher than what it was earlier. So a 70 points, so around an hour back it was 70 points. 50 points now, it's moved up to almost 70 points. The Dow Futures also trading with a positive bias. So all the cues currently trade to a positive opening, but still time for our markets to open. But Navneet's here. Navneet, what are the F&O cues indicating? It's been extremely volatile, but what sense are you getting in terms of the direction?
Good morning, Darshan, and good morning, Neeraj. Well, it is the penultimate day for the February series, and remember, this has not been a great series. Nifty has already lost nearly 650 to 700 points for this series. The cues are not looking that great because yesterday we closed below the 100-day moving average for Nifty, and the rollovers so far have been just about average. So if you look at the Nifty rollover yesterday, stood at about 30%, and there was some additions seen for the March series. So the open interest there was up nearly 43%. For Bank Nifty too, the rollovers have just been about average. So 21% was the rollover. And if you look at the addition for the March series, was the open interest nearly double there. Let's tell you how the options data is actually stacking up right now. 10,300 put strike was pretty much in focus in yesterday's session, as that added a lot of open interest addition. There was seen a lot of open interest additions. And remember, 10,400 for this series was now key, but now the focus has now shifted to 10,300. The red bars are your put strikes. So as you can see, there was a lot of put writing seen here and some call writing seen for the 10,400 strike. The sense what I'm getting is you could see a range of nearly 150 to 200 points from the current levels where Nifty is trading at the moment. But look at the FIQs, how they have been positioning themselves. And let me tell you, they've been on the right side of trade, at least for the February series. 24,000 contracts added on the short side for index futures. And look at the ratio. We started this series when the short positions were only 20%. That ratio has gone up to nearly 60% in terms of index futures. Well, they sold 1,800 yesterday into the index futures. On the option side also, there were short positioning seen once again, and that was in the form of call short, where maximum contracts were added, about 11,500. In terms of stock futures, there will be stocks which will be in focus, as we've seen IFCI. That's the new one in the ban period, so watch out for that. There was a lot of open interest addition seen for that one. Out of pan, HTIL and Oriental Bag. Just want to highlight for HTIL, yesterday there was a notification that the stock will be coming out of the F&O segment. So you just have two series now, March as well as April series, which is available to trade into the F&O segment for this counter. And lastly, I'll keep an eye on Apollo Tyres. That counter was pretty active today, and we did see a bit of long positions being added even for the March series. Back to you guys.
Well, many thanks for that. We'll watch out for some of those stocks as well, and we'll watch out for some of the pharma names as well. Darshan, I don't know if we'll talk about them in the huddle too, but Aurobindo, Strides, all of these will remain in focus today.
Yeah, so for pharma, there are a couple of news. First of all, the news that came in ET is that Oro is looking to, look at the European business of Canadian drug maker Accosiate. Aurobindo has a high focus in in Europe. They basically focus on Europe and US. So they had done the activist Western European deal. So that's working out for them. So that's something there. But more importantly for Aurobindo, I think today probably the verdict of the Unit 4 inspection will come in. It's a large unit. It's a scheduled inspection, and it's the injectable unit. So I wouldn't rule out, you know, any kind of an observation, because it's an injectable unit. It's much more stringent. But even if there are some observations, that does not mean that, you know, they will stop selling out products or the future approvals will be blocked. So Aurobindo, I'll watch out.
So sorry, just lay it out simply for our viewers. What would it mean for the stock based on the outcome of the inspection? I mean, what should, depending on what the outcome is, what should people watch out for?
Yeah, so we need to watch out what exactly happens, what the FDA does. So there's a high probability, since the inspection has ended, that they will release. If it's an all clear, it's obviously very good for Aurobindo. But even if they get some observations, and probably they will, because that's what the street is anticipating, because it's an injectable unit. So the rules are much more stringent than, you know, a normal unit. So even if that comes, that does not mean that Aurobindo will stop production at the unit. Life will go on as normal. They will have to rectify it. It depends on what the observations are. So that is something that we need to watch out for. Strides will be important. You know? So they've taken Analyst on a junket to Australia, and the guidance and you know, the commentary that they gave there was positive in terms of they're looking to become the largest generic player in Australia by 2020. They're talking about prices being stabilized there. In terms of you know, competitive intensity has also subsidized. So commentary was pretty decent. Probably we'll have more notes coming in over a period of time. So that's what we're looking at. Gaurang, hi, this is Darshan here. Do you track Strides? Do you have any view on what the future outlook holds for Stride, given their big expansion plans and the outlook in Australia?
So we have been maintaining a positive stance on Strides Microlab, and I think our targets are somewhere close to about 1180 to 1225, if I'm not mistaken. And extremely excited about whatever has happened in the recent times, including the news that you are speaking about, Darshan. The only problem was there was some grey area in terms of certain, you know, regulations, but we believe now it is thing of the past. And you know, companies like Natco, Aurobindo, Strides, these companies work in niche category, and most of their products are in that category with high margins. So we believe that yes, there is potential upside, and definitely this acquisition that they are talking about in Canadian markets, if that works out fruitfully at justified valuation, then I think footprints and growth definitely will trigger earnings.
Okay. Do you have a view on Ambuja? The numbers came out yesterday. Very high. The counter moved up on very high volumes yesterday. Most of the brokerages have given a positive view, but you know, some of them did have valuation concerns on Ambuja. What side would you be on the growth side or the valuation side for Ambuja?
So Darshan, last I think almost about more than 2 to 3 years we've been positive on cement sector, and we have a list of 9 companies, if you will, in the entire cement universe, and Ambuja happens to be one of them. This time around, we are quite excited about the volumes that will follow through, and if I'm not mistaken, there was a slight commentary on the capex as well. So I think this has come on after a very long time, these kind of commentaries and numbers. So our confidence has only got reinforced in terms of our conviction over the last 2-3 years on Ambuja. Though I know that a lot of companies which are underweight or equal weight or prefer not to cover Ambuja, but we remain positive.
But is Ambuja the top buy, Gaurang, or do you like some of these smaller cement names as well? Good morning, by the way. It's a bright blue tie that you have.
So I hope the market is also blue, like my tie. Good morning to you as well. I was expecting this question from you. Like I mentioned, we have a list of 9 companies. So let me mention that to you and your viewers. Starting with, of course, Ambuja, that Darshan and we were speaking about, followed by ACC Ultratech. I don't know if you would want to consider Grasim in this, but we do have a positive coverage over there as well. Dalmia Bharat, Shree Cement, Ramco Cement, JK Lakshmi Cement, and India Cement. These are, close to about 7-8 names that we like in the entire cement universe. And Neeraj, let me tell you this. I think the consumption is going to be driven by the government and private capex. And there is going to be an additional tailwind positive which has been over the last many years from the rural consumption. Gone are the days when you used to see those kacha houses which are now turned into RCC structures. And I travel a lot all over India and I've seen it with my own eyes. So my sense is that coupled with all these three, demand for consumption, earnings of cement sector is definitely going to look very good. And not to forget that Bharatmala Pariyojana that the Union Minister Mr. Gadkari has spoken about, 85,000 kilometers of road. What I am given to understand is that these roads are going to be cement concrete roads. So we definitely need cement to build those roads.
Okay, Gaurang, just hold on. We have a research team waiting for the huddle. Lots of news that's come out as far as overnight news is concerned. Obviously, a lot of brokerages spoke about Ambuja Cement's post its numbers. A lot of stocks in news. And an interesting note by CLSA where they made some changes in their model portfolio. IT is something that they are watching out for. So our entire team is here. Nikki, Shraddha and Yatin are joining me. Nikki, let me start with you. Lots of notes on Ambuja Cement. What are the analysts saying?
So, strong set of numbers. Most of the brokerages have pretty much reiterated the same view. Deutsche on Ambuja says that it has maintained hold, however, has raised the target price for the counter to 275 from 252. Says the number has been, the results have been a positive surprise. EBITDA has risen on account of volume as well as margin. Realization have improved, but then they have really, but then on a slightly cautious note, it has said that it's not enough to compensate for the cost inflation. JP Morgan on Ambuja Cement maintains an overweight on this counter. Target price at 320 per share has been maintained. Makes an interesting valuation. It says that volume growth is at multi-quarter high for this company. ASP has softened but still fared better as compared to the peers. And growth visibility is now falling in place for the counter. Macquarie on Ambuja Cement also has maintained the neutral rating and has spoken about the operational performance. It says that there is a strong volume growth that we've witnessed in this quarter. However, the capacity is expected to constrain the volume growth going forward, and they would like to await Ambuja ACC merger final step. Motilal on Ambuja Cement comparatively has a little cautious stand. It said that yes, there has been a healthy volume growth, and also lower other expenses have led to the margin boost coming in for the counter. However, they see a limited upside going forward for this counter, given that the valuations also at this point of time appear a bit expensive.
Okay, so Ambuja is one of the stocks that we'll watch out for, but a lot of stocks that came out with news after marks, including some results. So, Shraddha, what do you have for us?
So, Darshan, first off, good set of numbers coming in from Mahindra CIE. Revenues grew by 40%. Net profit growth was restricted to 33% on account of higher tax, but operationally it was a very strong performance with EBITDA growth of 72%. Margins also came in much higher at 10.4%. Hutam PPL, which is a paper company, also reported a good set of numbers. Revenues grew by 7%. Net profit grew by a very strong 75% on account of lower finance costs. EBITDA growth at 11%. The other part, we're also watching out for Indiabulls Real Estate. Now, there's a ET report which says that the PE firm Blackstone is looking to buy 49% in the office rental business of Indiabulls Real Estate, and that will be a $600 to $650 million kind of a deal, which will value its entire portfolio at close to $1.2 billion. Bilcon also could see a positive reaction. Order wins worth 380 crores coming in for the company. Wiseman Forex, now that stock has been buzzing and gaining for the last 2 days or so. They have postponed the demerger of the wind power operations. You have Max India, which has said that Max Healthcare's joint venture partner is looking to sell stake back to Max India. And lastly, we're also tracking Greenlam Industries, which will meet several fund houses, including Edelweiss, JM Financial and Antique of February 22nd. So we'll be tracking that as well.
Okay, so lots of stocks that we need to watch out. And CLSA has come out with an interesting note and made some model changes to their portfolio. What do you have?
CLSA, at this point in time has been talking about the economic data, which is slower than December. So Jan, in general, CLSA believes has been slower in terms of growth. In fact, they say that the indicators indicate that auto or domestic airline traffic data, petrol consumption and IIP are the data points which have shown some positive trends. On the other hand, coal production, trade deficit and exports, these are the weaker points as far as the economy is concerned. But talking about their strategy in terms of stock and equities, we have the brokerage increasing the weightage on IT services to a neutral. They have been underweight as far as IT services is concerned, but now since the US markets have started picking up, They believe that IT services is something which needs an upgrade in terms of stance. TCS and L&T Technologies are the top picks here. As far as Tata Steel is concerned, they have removed it from the model portfolio and brought down weightage on Reliance Industries. Probably this is because of the kind of run-up that we have seen in both of these stocks. Property, that is one sector. And CLSA has been talking about the recovery in real estate that they are expecting. It is the biggest overweight with a 6 percentage point weight. Property market, they say, signifies our confidence in the view of the housing market recovery. Staples, materials and telecom are the underweights, and financial services, industrials remains the overweight sector as far as this foreign brokerage is concerned.
Okay, many thanks to Nikki, Shraddha and Yatin. Gaurang, any view on the IT space? It seems that, a lot of money again seems to be flowing back into the IT since the markets are volatile, and the brokerage houses also seem to be thinking that. What's your take on this?
So, Darshan, to put it on record, we were one of the few brokerage houses which were actually holding the fort for the Indian IT companies, and this entire change has happened in the last 3 to 6 months, that is 2 quarters. But before that, if you ask anybody on the street, not anybody, most of the analysts on the street, whether you would go and buy Indian IT and pharma, they were treating them as untouchables, and I was quite surprised with that kind of an approach, given the historical performance and a likely possibility that the environment which was not conducive will definitely turn around over a period of time. And that's what exactly has reflected in the last 2 quarter numbers. So once again, that conviction has got reinforced. And if you actually go to see, I'll name 2 names which possibly none of the people talk about in terms of Indian IT, and that's L&T Infotech and L&T Technologies. One of them has given a return of close to about 60% plus. Other one has given you a return of almost 110%, if I'm not mistaken, since the time they got listed. And they have been, the quiet performers. And similar is the case with some of the mid-cap IT. Even your large-cap names, when the entire environment was bad, your TCS was somewhere close to about 2100. And then it recovered almost 50%, close to about 3200, if I'm not mistaken. Similar case with Infosys, with the entire management issue now being at the, thing of the past. HCL Technologies, the third company which we covered, Tech Mahindra, Cyient Limited, NIT Technologies, Persistent System, Mindtree, name a few once again. And, there was a commentary from NASSCOM as well yesterday. And my sense is that, we have advised our clients to be in the IT sector and Indian pharma almost 2 years back. So we have a smile on our face.
Well, we'll be speaking to Persistent Systems a bit later on as well. And keep in mind, I think TCS and L&T Technology will be in focus because CLSA, as Yatin stated as well, they've added to their model portfolio with a 3 percentage point weightage. However, I think the news is Biocon has come out.
So there's a statement on the Bombay Stock Exchange indicating that Biocon has said, and I quote, the US FDA has completed a pre-approval inspection of their manufacturing facility in Malaysia and issued a Form 483 with 6 observations. They are saying that they intend to respond with corrective and a preventive action plan in a timely manner. This does not look good. Neeraj, 483s are part and parcel of the game. But for Biocon, it's a new facility, and it's where their insulin glargine is filed from. So if there is any kind of issues as far as, data integrity or any other issue, that could be hampered. As of now, we don't know what the issue is, what the Form 483 says, but certainly not at all positive for Biocon. It's a new facility, and glargine is a big drug that they were hoping to get. That probably will be an issue. Gaurang, do you track Biocon?
We do, but that is on the reduced side, Darshan, and not to forget, I think close to about being at somewhere sub 400 levels, the stock has come a long way. Post that, 2 biogeneric approvals, and of course the news that you are talking about. Initially when we had a positive coverage, I was quite excited about this Malaysian facility when the announcement was made by the management, and equally I was excited as to commercialized production adding to the balance sheet and taking the numbers forward of the company with growth in mind. But then after, there have been certain issues, and including this one, of course, we don't know what this Form 483 is all about for the Malaysian facility. But incremental upside on the fundamental side, we believe is quite limited. And would advise to book profits in case if anybody is invested in Biocon, and maybe shift into an Aurobindo, Natco, Ajanta Pharma, Strides, Sashun that we were talking about earlier, or an Allchem Laboratories. That's what we would do.
Okay. I think just keep in mind, viewers, that we do not know what the nature of the observations are. So whether this is a big overhang, whether this is transient in nature, whether this gets resolved very, very soon, is difficult to say at this point of time. Just that the facility remains a very important facility.
It is. It is because a lot of the insulin manufacturing will happen there. Glargine obviously is from here, so that's what we need to find out.
We'll try and connect with the management. I'm sure our teams are, of course, calling up Kiran Mazumdar-Shaw as we speak. We'll try and get some perspective, maybe from an analyst as well who tracks this more closely. But while we wait to do that, and Biocon will remain a stock in focus, while we wait to do that, let's move a full tilt towards the technicals as well for a bit, because the markets are likely to start off on a positive note. Meghana Malkan, author and trading coach at Malkansview, joins us on the show, as does Chandan Taparia with his thoughts on what the derivative position is looking like. Both of you, thank you so much for joining in. Meghana, an uptick expected today. SGX is showing that we're making it a habit of defending or moving in or around that 100-day moving average. Is that where we are likely to close for the expiry? What's an index strategy today?
Yeah, morning Neeraj. Well, on index strategy, as we discussed on Monday morning, I feel this week should close on a positive note. Reason being that the panic bottoms that had been formed in Nifty and Bank Nifty, the way they had been formed, the candle patterns that we saw there, as well as the volume that took place there is a lot of technical evidence that says that the bottom should hold. Looking at the behavior of Bank Nifty, I know that looks a little dicey, which it closed at the bottom yesterday. Nevertheless, I am expecting a positive rebound today. I think that bottom should hold. Expecting a pro gap because the way SGX markets have been behaving. I think this calls for a very low risk buy. So should you initiate a buy position on Bank Nifty on the opening, your risk is low, which is the panic bottom, and your reward is the 20-period moving average. So there, on the expiry, I'm seeing some positive close there.
And then how would you be approaching trade today? Not just for today, but for this expiry?
Yeah, I'll continue to be with a negative stance in the market, because in the entire month, the Nifty fell down by 6% and trading 250, 300 points lower than its volume weightage average. We have seen sustained call writing at all higher strikes, and index is continuously making lower top, lower bottom formation. However, it has formed some bottom near to 10,276, 10,300 levels, but upside is also seems to be limited because of the call writing activity. On last trading session, we have seen some put writing at 10,300, and that is having the highest put OI congestion. But at the same time, sustained call writing and the meaningful OI is standing at 10,400, 10,450, 500 strike. So that's why expecting market to find hurdle at higher level. As of now, on bounce back move, I'll initiate for the short position, looking for a stop loss near to 10,450, and again expecting index to go towards 10,300, 10,276 level.
Okay, what about specific stocks? Meghana, start off with you first.
Well, I like stocks in the IT space, being on the defensive side, and they've been holding on. I like Polaris to begin with. The momentum has been consistent on the higher side, into the bullish zone. Sorry, on the lower as well as medium and the higher time frame chart. So Polaris calls for a good buy. It's a safe buy. I would rather recommend with a stop of 455 for a target of 520. The second one, again from this space, I like Hexaware. Just because of the volume and the patterns that have been forming in this stock, calls for a good buy here. It's a strong stock. Weekly patterns have been very good. The momentum is also holding on well. So Hexaware calls for a good buy today with a stop of 328 and a target of 360.
Okay, Chandan, what about you? Your specific stocks?
Yeah, first is buy on Coal India. The stock is managed to give the highest daily close in the recent above 310 zone. We have seen fresh put writing at 300 strike. On closing basis, it has formed a positive price pattern. Previous resistance have turned as a support. So expecting the stock to start the next leg of rally. It is at the verge of the fresh breakout, and on last trading session, we have seen jump in the trading and the delivery volume. That also suggests the positive momentum after a long consolidation. So expecting this stock to head towards 321, 325. One can buy with a stop loss of 305. Second trade is buy on Ambuja Cement. We have seen a consolidation and the bottom process at the lower levels. It has also formed a rough head and shoulder pattern. The daily chart surpasses 50-day exponential moving average. We also seen jump in trading volume. Open interest also added. So expecting this stock to move on higher side as per its price pattern. So recommending to buy with a stop loss of 257 and expecting the stock to move towards 275 in next couple of trading sessions.
Okay, Chandan, just wanted your view on two counters. First of all, Voltas fell in significantly yesterday on high open interest build-up, and secondly on Titan. So how do these two stocks look?
Yes, first looking at the Voltas, here price structure is negative, but it is near to an immediate support, and the recent swing low of 555 broken, then the stock may start the next decline, which may drag it to 3 to 4%. So hold below 555, may take it to 540, 538 kind of level. And for any kind of short position, one is to follow the stop loss of 573, 74 level. So structure and the momentum is clearly negative side on the Voltas. But Titan, I'm looking for some buying interest. The stock has managed to hold and given a decisive close beyond 830 after a consolidation of last 3 weeks. It has also negated the lower tops, lower bottom of last 5 to 6 weeks, close near to its 50-day exponential moving average. So holding at current levels may take it to higher levels. Those who are looking to initiate the long position can put a stop loss near to 815 and look for an upside move to us 855, 830. Also expecting some recovery and the short covering move into the counter.
Okay, Gaurang, just your final view in terms of Titan. Given the fact what's happening in the entire jewelry sector, do you believe that Titan will benefit?
Well, two or three things, Darshan. One is the pedigree of the management. The second is the product, diversified product and businesses that they have. Third one is the positive coverage that we have. This is the only company, Titan company, in the gems jewelry that we are positive on. And our sense is that yes, sentiments could be a little bit on the negative side when it comes to pure gems and jewelry related businesses, vis-a-vis comparison to Titan, which has got diversified business. So we maintain positive, and I think these, this negativity on the entire sector on the fallout of PNB fraud, I think it's an opportunity to nibble into long-term investment idea as far as Titan is concerned.
Okay, many thanks for sharing the view on BloombergQuint, Gaurang. We look forward to having you more often. But the big news that came out today is the Biocon news. Cinderella Carvalho she's a senior analyst at Daulat. She joins us on the show. Cinderella, first of all, what did you make of the news in terms of a 483 with 6 observations for their Malaysia plant? How big is this plant, and which are the important products that have been filed from here?
So, first thing what we need to note here is that US FDA has inspected the plant, followed by the filing of insulin glargine. This plant is largely focused on human insulin and largely the insulin variant, and it was started earlier with the Pfizer partnership and now remains with Mylan Biocon partnership and largely focused on developed markets for insulin. So basically, it is a good thing that after the filing of the insulin glargine with US FDA, within 2 months the agency has visited the plant. That's a good progress. Now, in terms of the 6 observation, because it's a pre-approval, that is, basically they do not manufacture anything as of now. So we'll have to wait and go through the Form 483 to understand if there is anything in terms of anything on the negative side or anything which is minor. We'll have to wait for the Form 483 to come out. So that about would take around a fortnight for us to get a handle of the Form 483, and then only we'll be able to comment. But
no, irrespective of the 483, if let's say there is something that's come out negative, or there are some issues with the Form 483 which point to something serious, is there any possibility that the US FDA can block glargine from being launched?
Yeah. See, of course, if the plant is not ready, then any launch would not happen, right? And as I told you, that this is largely for the insulin variant. So presently, even EMA has already cleared the plant for insulin glargine, which they have filed with Europe, and we are awaiting the approval. So basically, this plant, if there are deficiencies according to the agency, the approval would not come. So it will straight away delay the approval in terms of insulin glargine filed with US FDA if there are any kind of deficiencies which are negative. But, according to my knowledge, it's a pre-approval inspection, and I feel that, these should not be anything very severe in terms of observations. These should be minor and SOP related, and the company should be able to respond to it. The only, I feel that we will come to know if there is any negative only once we look at the form for it.
Okay.
But before that, I would not make an assumption regarding this because it's a pre-approval inspection.
Got it.
So there is nothing much because they're not producing anything as of now. They just filed the product.
Sure. Okay.
Yeah.
Sunila, thanks. Much appreciate you giving us that clarity as well, and thanks for joining us this early in the morning. That's the view from Dolat Capital. By the way, watch out for Biocon. Yes, watch out for the pre-open session. We're likely to start off on the positive note because the rest of the world is painting a green tick. The SGX Nifty indicating a start which is above 10,400. So we'll have a good start for sure. Let's see where we take on from there. Do we sell off as has been the norm, or do we come off as has been the norm the last few days or not? For the first ticks, about 1.25% for the Sensex. The Nifty, a more believable 0.5% uptick. Would probably be slightly better than that. But 10,412 is what the pre-open rates first few ticks are suggesting. Let's wait and watch. The broader markets too will likely start off on a good note. What's moving? Ambuja showing some strength, though these are early days. These rates may change. Also keep an eye out on Coal India, Vedanta, Hindalco, that entire bucket post the reform norms announced yesterday were very active. Let's see if they're active in today's session also or no. And then of course Aurobindo and Biocon should come up on your screen. It may have a sentimental downtick, may well have a material downtick during the course of the day as well. The Dolat Capital of course believes it's not a serious case, but look at that tick. The first tick is 10% down on Biocon. Aurobindo is the other interesting one. Should be in focus today for a development that will happen a bit later on in the day, but should be in focus, about 0.25% higher. And then a clutch of result reactions as well, right? The likes of Mahindra, CIA, etc. could be interesting.
Yeah, they will be. Also wanted to watch out for Huhtamaki PPL. Came out with a decent set of numbers. Mahindra CI is responding positively. Dilip Buildcon order worth 380 crores. They're making it a habit of getting new orders. So Dilip Buildcon starts with a positive buzz. Let's take a look at Fortis because the counter is in the F&O ban, but nevertheless Edelweiss has been managing to sell. So that one is in the negative. Indiabulls Real Estate will be important. Economic Times today reported Blackstone is looking to take stake in the company. So it's trading flat. I remember, Neeraj, we having the same conversation last week. They didn't come out with any blockbuster announcement that time. That's why the counter took a beating. Let's take a look at Strides. A lot of analysts have met the management. Any kind of positive view that's coming in on the counter. I also want to point out Vedanta. Neeraj, a lot of brokerages have come out with positive notes. And the reason that they are saying is they have 3 or 4 businesses. First of all, it's copper, there is zinc, there is crude. And all these 3 are trading at new highs. So Vedanta is a preferred choice. At least there was a Kotak note and there was an IIFL note. Both of them indicating the same thing, that, we like Vedanta and we're raising our target price given the fact that all the businesses that it operates in on the commodity side, the base price of them are moving up significantly. So Vedanta, I'll clearly watch out in trade today. An interesting note yesterday came in on Maruti by Morgan Stanley. Neeraj. What they're saying is they expect the Japanese yen to gain sharply against the dollar, and that has been doing. Yeah, and because of that, they believe an FY20 EPS hit of anywhere between 4 to 8% can come in Maruti. But on the flip side, Maruti has been reducing the royalty and the dependence on the yen, so that could be shielded. But nevertheless, 4 to 8% impact on FY20 numbers could come in, and Maruti has been a marked underperformer on this year itself.
Yeah, sure, 10% off the highs as well. By the way, the man of the match though could be Eros International, starting off 20% higher. So do watch out for that one. Looking to start off 20% higher. Let me rephrase myself. And Mahindra CI is gaining traction. The operating numbers much above estimates. That one is up about 8% as well. Let's see if Somit has some more color on what brokerages are saying for the day today. Somit, what are the stocks that brokerages are talking about?
So on the big brokerage calls for the day, first I have is Credit Suisse on Tata Steel. Now they have maintained their outperform rating on the stock with a target price of 860. Now according to the brokerage, Tata Steel's bid for Bhushan implies an enterprise value to adjusted EBITDA multiple of 6 times. Now, these valuations are not cheap, but with the steel cycle picking up, the deal can still be EPS accretive for Tata Steel even at this expensive valuation. Now, the brokerage disagrees with the market concerns about the bid being too aggressive, and lastly it says that if Tata Steel acquires this asset, it might need minor working capital and capital expenditure to be done on these assets. Second we have is Morgan Stanley on Coal India. Now, they have maintained the underweight rating on the stock with a target price of 221. Now, Indian government has approved allowing commercial coal miners by mining by private and international players. Now, on this development, according to the brokerage, the execution and timelines are the key thing to watch. Now, the brokerage expects the coal mining by private players could still take a few years, and it is a positive for coal India's production, while there's a downside risk to coal imports. Now, from Coal India's point of view, if you see, the key things to watch out for according to the brokerage will be how aggressive the bids are in the auction, because an aggressive bidding could lead to higher overall cost, thereby supporting higher domestic coal prices.
Thanks a lot for that, Somit. Well, Deven Choksey of KRChoksey Securities joins us on the show. I could well have started off with the bigger newsmakers, the Coal Indias, Ambujas, Aurobindos, maybe even a Biocon. But Deven, I want to start off with something, a space that you track very, very closely, and Reliance, but for different reasons. Now, they're trying to shape up their dominance in this digital content space in a big way with the deal of Eros International PLC as well. And it's having its impact on Eros International, the listed stock as well. What are your thoughts here? One, for Reliance, and two, more importantly, for the smaller play, which is Eros International, if you track that one.
Yes, good morning, Neeraj.
Good morning.
Well, I think very important announcement, and I must say that I think Reliance is playing their role very, very well in building the entire pipe segment of the business. When I say pipe segment of the business, basically you have content on one end and you have distribution on the other end. Jio is their distribution engine, wherein I think they are providing the last mile reach to the companies, I think, where they can distribute their contents. The Eros, along with Balaji, along with Viacom, I think is a strong content library that the Reliance is creating. And this is going to get piped into the Jio framework, I think, which is what I am sensing it. If you look at, I think, the other properties of Reliance, I think the sports property, the gaming property, which they are basically wanting to bring in, all of these contents which they have to travel on the Jio platform, I think you require a proper content management system. Eros, I think, has a typical ability to basically, I think, digitalize the contents as far as the entertainment space is concerned, with a huge library. And the important announcement which I see along with this announcement is that they are also having the CEO, Ms. Anand Deshpande, coming in as a person in heading this particular venture for Reliance, which means that they are clearly indicating that they want to go into this space, I think, with a very, very clear game strategy of tightening the content at the back end and I think distributing at the front end through Jio framework. According to me, I think if you look at the international market in which you see this kind of a pipe framework, the pipe framework commands a huge amount of valuation, and this could be possibly a move towards that particular thing. AT&T Time Warner is a case in point. I think if you look at the complete Time Warner content getting piped with the AT&T framework, it is making somewhere around $52 billion worth kind of a what you call merged entity. Similar is a situation emerging in India where the content providers would get merged into the pipe service provider. They could possibly get higher valuations.
Okay, that's some interesting thoughts, and I want Deven Choksey's thoughts on this other stock as well, on this other space, but the space in focus is what Darshan brings us on Stock Scoop, and that is Prakash Industries. It's been expanding operations over the past few quarters. The steel and power to PVC pipe manufacturer has also been shoring up its raw materials by bagging mining licenses. It's also had an impressive 160% rise in the stock price too. It's making it a Stock Scoop today. Darshan, tell us all about Prakash.
Yeah, so Prakash Industries is basically a steel maker. Majority of their revenues comes in from the steel division, but it also has other divisions. So basically, they have steel when 73% of the revenues comes in. Power is 18% and PVC pipes is 9%. But the majority of margins comes in from the power division and PVC. Steel is at low at 4%. So this is basically what the business does. This is basically the Prakash Industry business. Now the current capacity of steel is 1 million ton per annum. By September 2018, their there will be the installation of the 6th kiln, which will take the capacity to 1.2 million tons per annum. So they are expanding steadily, slowly and steadily, and that's what they're looking at. Now, in terms of, let's look at the valuations and the financial, the market cap of 3,300 crores. Look at the sales. The FY17 sales was 2,400 crores. In the 9 months, they've already done 2,000 crore. So the market cap to sales ratio is pretty much very, very reasonable. PE of 8 times on an FY19 basis, which is one of the cheapest steel makers, and FY19 EV to EBITDA of 6 times, much cheaper than its peer group. So this is basically the comparison. Now look at what they have done in terms of revenues. The revenues from a 2,281 crore in FY16, they have moved to 2,400 crore, and in the first 9 months they have done almost 2,100 crores. The margins have improved from 9% to 12%, and the first 9-month margins were 18%. And look at the EPS. From a 1.75 in last year, they made it to 5.97. In the first 9 months, they've already done 3 times of what they did last year. So financially, they seem to be doing extremely well. That is what is happening with Prakash. Now, in terms of guidance, what they gave, extremely strong guidance. They're saying that they expect the full capacity utilization from the current 100%, from 80% to 100%, and coal linkages that will come out will help them save almost 100 crores a year. So that was the guidance. Now, in terms of their mining license, they have 2 mines. One of their mines, iron ore mines, will be operational by 2018, and the second mine will be commissioned in 2019. So the backward integration will definitely help Prakash Industries at this point of time. What they're also saying is that the capacity of steel from the current 1.2% that will happen in September, they're looking at 3 million tons per annum in 3 months, and they're looking to double their pipe capacity by September 2019. So that is something that they are extremely bullish on. Apart from it, look at the margin guidance, what they've said. So in the first quarter, it was 17, in the second quarter, 19, the third quarter, 21, and they've said in the fourth quarter, they'll do EBITDA margins of 25%. So that is extremely strong for Prakash Industries. Apart from it, if you're looking at the sales and turnover guidance, in the fourth quarter, they expect a sales growth of 35% and a turnover, the sales volume growth of 35% and a turnover growth of almost 60%. So that's extremely strong guidance that's come in. Now, the problem is that the promoter shareholding has fallen from 46% right up to 40%, 41% currently. So the shareholding has gone down. But if you're looking at what they've done recently, is that the promoters have allotted warrants to themselves. So 1 crore warrants were allotted to promoters at 208 and 12.5 lakhs to non-promoter at 208. And whenever you see when promoter themselves give themselves warrants, pretty much that marks the base for itself. So 208 is an important price that you need to watch out for. The debt trajectory has actually come off from 965 crores just to 580 crores of debt that they have. So the debt trajectory is doing well for Prakash Industries. What works for Prakash Industries? The demerger of their PVC arm, that is something that will work. A QIP of 500 crore is planned so that their base capital improves. The captive iron ore mines aids the backward integration, and they said that they will be debt free in the next 2 years. So that is extremely positive for Prakash Industries. Obviously, some concerns was recently in the SEBI scrutiny that was not well, but they came out of it. Does not pay dividend, and the return ratios are in single digits. So if they start improving operationally, these will also come up. So this is what we want to speak about Prakash Industries. Couple of reasons, especially the promoter issuing warrants to themselves and a strong guidance makes it to stock scoop.
Great. Thanks a lot for that, Darshan. We are just 3 minutes away from market open. Deven, Choksey, any thoughts here on Prakash or this space at large? Very quickly.
Neeraj, I have heard Darshan, I think, narrating wonderfully well, I think, across the entire space in the Prakash industry, where each and every division is basically showing growth. What is more interesting is that the steel sector per se is showing a robust signs of growth, and the companies are positioning themselves to take the advantage of this particular rising cycle. If they execute the projects well, probably I think you will have in the near term also a thing to talk about as far as I think the earning growth is concerned. Otherwise, generally one has seen that one gets into, when a commodity company gets into capex mode, at that time I think they suffer more on the margin front, etc. But in this case, I think this may have to be seen a little differently. So I must say that we don't have the coverage on these companies. I would refrain from putting any recommendation for the timing, but we study this particular subject a little closely because it belongs to the commodity space and particularly the steel sector.
Okay, Deven, many thanks for that, but stay on. So much more to talk about. As we speak, the pre-open rates have ended, of course, 3 minutes ago. Eros International likely to start off as the top gainer. Mahindra CIE follows suit about 4.5% higher. And on the downside, Biocon has not reacted too violently, just about 2.5%. So not too dramatic out here. Meghana, quick view on Biocon before we take in the top ideas for the day. Quick 30 seconds. Would you trade Biocon?
Well, Biocon, Neeraj, there are a few candle patterns on the weekly chart which really do not want me to trade it this week. Though on the longer term time frame, if you look for a month's horizon, I would still have a positive bias because the weekly momentum is into the bullish zone.
Okay, Meghana, what's your top pick for today? My top pick for the day is Polaris. As discussed, I think the momentum is really holding strong. I like the daily momentum, the way we ended with the candlestick pattern and yesterday's closing also. It made a lot of sense to have it as a good pick in today's buy list. So Polaris is my good pick for the day with a stop of 455. Okay, and Chandan, what would your top pick be?
Yeah, already discussed Coal India and Ambuja Cement, expecting positive start in the momentum in both the count.
Okay, Polaris, Coal India and Ambuja are the top picks from our technical experts. Thanks both to Meghana as well as Chandan for joining us on BloombergQuint. And Neeraj, just 20 seconds for pre-open. What are the major cues that we need to watch out? I think...
So, no, I guess the Nifty has already shown its hand, Darshan. The pre-open rates are suggesting about 65 odd points. So, we'll start off in the green. The question mark only is, do we sustain? The last few days, we've started off high and then come off within the first half an hour to 1 hour itself. Let's see if today is as volatile or do the global market support help us. But these are the first rates. Market open this Wednesday morning. Penultimate day to expiry. 0.5% higher for all the key indices. The Nifty Bank maybe a bit muted, but still about 100 points higher, so that's not a bad start. The broader markets, I believe, would be reacting positively, maybe 0.5% to 0.75%. Actually, just about 0.25% for the Nifty, 0.75% for the small cap index. The heat map, I would believe 3 odd rows for the green, maybe more. Actually, no, a lot more. There are hardly any losers. That's the key thing. But that will also mean that there are not enough gainers because the index is just about 0.5%. Ambuja continuing merry ways, 1.5%. TCS gets added to the CLSA model portfolio, 3 percentage points. That's doing well. I think pharma by and large seems to be doing okay for itself because I also see a Lupin and a Dr. Reddy's out there in the list of gainers. Aside of that, not too many large gainers. So it's Ambuja which on the index is making the waves and the noise that it should make. Splendid set of numbers yesterday. Brokerage is by and large neutral to marginally bullish because of the valuations, but nobody negative, and that should help. Very few cement companies, remember, have come out with good numbers. What about specific stocks? Eros International Media starting off about 7.5% or 8% higher on this Reliance deal. So not a 20% uptick, but still about 8% is not bad. What else? There are a couple of other newsmakers and some result boys that have come out too. One, as I said, in the CLSA model portfolio with 3 percentage point weightage, both TCS as well as L&T Tech, Technology Services, and L&T Tech starts off about 4% higher. Both these boys, whether the engineering play or the technology play, the newer kids in the L&T stable, have been doing really, really well the last few sessions. Earnings impact being seen on Mahindra CIE, actually deceptively trading in the pre-open rates. We thought it would start off 5-6% higher, just about a couple of percentage points. So not too much, but positive nevertheless. And last but not the least, US FDA's call, not really the final call, but a verdict on Aurobindo will come about later on today. Ahead of that, marginally flat in the session today, just about 0.5%. Darshan, what else are you spotting?
Shakti Pumps is something that I'm spotting has actually moved up today. It's up almost 3%. Indian Terrain is up almost 6%, so that is doing well. DB Realty is up 4%. Uniforce Enterprises has managed to move up. Dollar Industries is one of the other counters which has managed to move up. Dilip Buildcon reacting to the big 380 crores order that has moved up. Mahindra CIE reacting to the number that has moved up. But we're not seeing any kind of big gains that are coming in. On an average, it's 4 to 5% gains even on the mid cap. So it seems that the market has given up most of the opening gains. So it seems like it's a muted start. The 60-70 point uptick on the SGX Nifty not holding on. The Nifty is just up 30 points. So will it be another day where we end in the red again? I just wanted Neeraj banks to pull up banks because yesterday one interesting thing is now after the Nirav Modi issue, a lot of banks have started issuing their clarification on Rotomac. So could that be a big trigger? Which are the other banks that will come out? Most of them have said they've classified it as an NPA in 2016, but you never know what comes next in PSU banks.
Yeah, it's slightly difficult to call. By the way, a stock that we missed out kind of talking about too much is at the broader end of the spectrum, the fall that we've seen in Oil India. That's down about 5% in trade. I think that the DGH may review plan to sell that 60% stake in the Oil India fields, the both ONGC and Oil India. Maybe that is having its bit of an impact on Oil India today, because I could see no other reason. The stock is down about 4.5%. So do watch out for that as well. And Biocon, just one more stock that I want to mention. By the way, incidentally, Bhushan Steel 2 has come off from the levels that it was trading at the day before yesterday. 2 days in a row now. Despite the aggressive bidding, it's down about 1.5%. Some sanity returning there. Deven, Choksey, thought on Oil India, ONGC, or some of the others. The news that I could see, and probably the only news that I thought would impact, was this news that DGH may be rethinking its plan to sell that 60% stake in the hydrocarbon blocks. Is that a reasonably big negative, you think?
Honestly, Neeraj, I haven't applied the mind from that point of view today. So I wouldn't know whether it would be a negative or otherwise. The point which I would like to put across is that the commodity prices are remaining volatile. The crude oil commodity prices are remaining volatile. And I think now we are seeing that this particular thing would get settled down between $55–65 kind of a range. So if that is so, then in such situation, I think at least in the near term, you might see some adjustments in the book pertaining to the inventory, and that could possibly dampen the profit. As such, I am not a believer that I think this year could be a good year for many of the upstream downstream companies. I think they may remain victim of good amount of volatility in this particular year. And that's where I think my focus would not be completely on the PSU companies. At the same time, PSU oil companies, the government is basically on the agenda of consolidating them. So generally during the consolidation process, I think you don't see the value creation happening. And that's the time I think when you stay a little away and allow the companies to materialize as far as I think their consolidated game plans are concerned. We stay focused with Reliance largely because I think the Reliance is a completely integrated play with various verticals. And that's where I think our confidence remains with Reliance remains high vis-a-vis I think the PSU oil companies. So as of now, the view is that we stay a little away from the PSU oil companies for the reason that I have stated just now.
Okay, many thanks for that, Deven, and good to have you on the show, and looking to have you more often on the show going ahead. Thank you. Chakri, Lokapriya, Managing Director at TCG Asset Management, joins us on the show. Good morning, Chakri. Let's start with the basic one, and everyone's talking about the entire issue with the PSU banking space. How concerned are you? Would you recommend staying away from this because you never know what skeletons will come out next? Is it a good time to shift to private banks, or is banks an avoid totally?
Good morning. Frauds do happen once in a while. And yes, the PSU banks have slightly more archaic systems, technology systems, and therefore not picking up things as they should. But this itself, will lead to a short-term slowdown among the PSU banks, even their ability to lend because they'll become more cautious before they approve any loan. And on the other hand, the private banks will continue doing what they're doing. And mind you, largely private banks are retail lenders, they're not corporate lenders. So the main corporate lenders are a few of them like ICICI, Axis, maybe IndusInd Bank. And these are robust banks in terms of their systems and processes. They will take some market share away from PSUs again, like it happened like a couple of years ago. And therefore I think we will see a shift towards private banks.
Chakri, good morning. This whole argument about PSUs giving competition to private banks and NBFCs by virtue of this recapitalization and becoming healthy is now out of the window. So private banks will do what they continue to doing. What about NBFCs in the wake of the rising yields and rising cost pressures, but the feared competition from PSUs not looking like impact them in 2018 at least? What do you do here?
You're right in terms of NBFCs. Again, we'll go back to rewind back about a year and a half years ago, where they were taking some amount of market share. And second, rising costs is a concern for, generally in terms of NBFC's rate of growth, which will kind of slow down. So they won't grow as fast as they did 2 years ago. And in terms of PSU bank lending, yes, will come down, but PSU bank lending and NBFCs, they lend to slightly different things. The big ticket corporate loans are always made by the PSU banks. So NBFC is not going to take any kind of market share in that space. It's more the smaller ticket SME type of loans and the consumer type of loans, consumer durable auto loans, etc., etc. That's the space where NBFCs will continue to take market share.
What about industrials? I was reading a couple of reports, and if you see the third quarter numbers, some of them came out with decent numbers. L&T came out with a strong set of numbers in the construction space. Do you think that there are green shoots that are being visible? Would you like this space from going ahead?
Industrials, are in a fortunate place given the government's policy thrust of irrigation as well as infrastructure. And given that this is an election year, we're going into elections next year, so there'll be a huge amount of push into that space in building roads and doing irrigation projects. And the number one beneficiaries are EPC companies, L&Ts, the Nagarjunas, the PNC infrastructure, companies like that. And mind you, their valuations are not really stretched. So from that perspective, there is a valuation support. In the most recent quarter, the order book has accelerated very well. Okay. And so I think they're looking good.
What are you doing in your fund? Which are the pockets there you're seeing, activity pickup? Which are the sectors that you're accumulating in your fund?
One is infrastructure. All these names we are adding. And second, we're also looking at irrigation as a space, another pet government theme of focus on farmer and agriculture. So the entire irrigation space, Jain Irrigation, Kisan Molding, Finolex, that whole space will continue to do well, or rather we'll see an acceleration of earnings growth in that space. And in each one of these companies, there's also a company-specific catalyst, either reducing debt or expanding into a new estate for providing irrigation, EPC, etc. So a confluence of both will help these companies to do well.
Interesting. What about the other allied pockets? One, since you mentioned Finolex, I was reading a note post the Astral numbers and about the kind of work that all the pipe makers are doing, and how for Astral the adhesives business seems to be doing well. I think the stock is up and about in today's session. Do you look at this one?
Finolex, I haven't looked at it lately, but Astral, yes. And Astral, they'll benefit. It's a combination of both policy push, which they benefit from. So one is irrigation. The second is also housing, because mass housing, urban housing, everything requires pipes, fittings, fixtures. So they benefit from two big, large industry growths. And plus, you're seeing a huge amount of innovation in that space in terms of the building materials that go into the making of the pipe, which reduces their cost and increases the margin. And that will improve profit margins for this entire space over the next, let's say, couple of years.
Okay. Two questions, Chakri. One is IT and the NASSCOM guidance notwithstanding. You would presume that some of the listed players will do much better than that 9% band as well. Maybe a couple of large players might have problems, but otherwise, by and large, the space might do better than the 7 to 9% band that NASSCOM has given for the industry. Are you seeing value still remaining in this space when the companies are seeing green shoots, because the stocks are no longer at the levels that they were prior to October 2017?
You're right, but one of the good things about IT as a sector is the certainty of earnings growth.
Sure.
And which is not going to be impacted by a kind of immediate knee-jerk reactions that we've seen post LTCG, the budget, the Indian politics, etc. Because it's dependent on US demand, which is very strong. Valuations are not demanding. Yes, they have come up, but still, they will grow in line with their earnings growth or better.
But the stock returns or large caps in the IT space?
The mid caps actually have done fairly well over the last space. The valuations are still at a discount to the large caps, so they will continue to do well from a stock market perspective.
What about the real estate space? Most of the counters have actually more than doubled since demonetization. Is there more room for them to grow, or is just a real estate frenzy that's happening? Because on demand, on ground, there's nothing happening actually.
I think for real estate, one, they were coming off extremely low valuations. Second, in terms of now there is an urgency on the company's part to get rid of their inventories that they are sitting on. Huge unsold flats, huge unsold commercial real estate. Commercial real estate has seen a significant pickup, both in terms of volumes and prices. So residential is still soft. So from that perspective, companies like Prestige will do well. And Shobha is a strong balance sheet, has improved its balance sheet, sales are improving, and therefore pockets of strength will be there. And also this huge expectation that at some points REIT will happen in this country is also keeping the stocks up.
Chakri, is there a theme or a set of stocks existing wherein the valuations are not obscene and you see earnings growth CAGR for the next 3 or 4 years northwards of 15-20%? Is there a combination like that available currently?
I think so. In specific pockets like petrochemicals, chemicals. Now, chemicals is a very big space because chemicals are used both in agriculture, specialty chemicals are used in making, whether it's a consumer good, even we're talking about pipes. Lots of chemicals go into making of pipes. That space is good because for various reasons, companies in that space have good 40-50% of their revenue coming from exports. And exports markets are doing well. The US is doing well, EU is doing well. Their raw material costs are kind of stabilized versus 3-4 years ago. And therefore, their earnings will grow north of, I think, 15% easily for the next 2 years.
Specialty chemical companies, right?
Companies like Aarti, Make Money Organics, Finotex, companies like that will grow clearly north of 20% earnings.
For the next 3-4 years. You can pencil in that in.
We can pencil that in. And in terms of the valuations, are probably trading at 18-20 times.
Okay. Anything on metals? Because most of the counters have done well. Base metal prices only have gone up significantly. Do you like anything in the metal space?
In the metal space, continue to like Hindalco, the large ones. Because there you have a huge amount of both export, the export markets are very strong, and therefore the pricing, the domestic pricing in India is a reflection of that. And India, with a huge infrastructure kind of a thing, and coming off a low base, they are looking good. And I think companies like Vedanta and Hindalco will continue to do well.
Chakri, final question really. When we spoke, when the markets were in a bit of a tizzy recently, you mentioned that you are using opportunities like these to add on to India positions. I'm guessing the stance still exists?
Yes, the stance still exists, and actually I'm more tilted towards mid caps, versus the popular opinion that large caps are safer. Yes, I can see that point of view, but I'm seeing a lot of value in mid caps, and because I think the large caps, the Nifty, will be a range bound for the rest of the year.
Two to tango maybe. We just spoke to Mark Mobius the other day, and he was saying that he believes that Indian small caps have a lot of room to grow as well. A lot of money managers seem to be betting that.
Yes, I was. He was my boss at one point in time.
Okay,
yeah.
That too. Yeah. Great. Chakri, lovely having you today. Thank you so much for taking the time on and speaking with us, and look forward to having more often on this forum.
Thank you.
Thank you.
Okay, so Ambuja, the cement pack doing well, IT is doing well. We should take a break on the news that the Nifty is flat, but the fact that we'll talk about both of these pockets on the other side of this break. We get you Murtuza Arsiwalla. We'll speak about how he has viewed the cement space and the results thereof a bit later on in the show. We'll also get you Anand Deshpande of Persistent Systems, who speaks about the NASSCOM guidance and what his company individually could do. All of that coming up on the other side. Stay tuned.
job, अरे 5 to 9 job, भाग दौड़, all the time job. The roaming वाला job, the deadline वाला job, or are you living in the market वाला job?
Life is full of options. Choose a job and earn on your own terms. Choose to become an LIC agent. It's more than a job. It's career insurance. Be your own boss. Be an LIC agent. Ab life set hai.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution hai. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
दुबे जी मुंबई की बारिश देखने का शौक लेकर आए और लैंड करते ही फिसल गए. अब शहर में नए थे और इनके पास नो जोनल कोपे वाला ICICI लोम्बार्ड कंप्लीट हेल्थ इंश्योरेंस तो था नहीं.
हाँ, अब कहा करें. हमारे शहर का बीमा का था 60,000 और यहाँ का खर्चा है 90,000. वापसी के पैसे भी नहीं बचे. जो था सब इस घुटने में घुस गया.
कौन घुसा?
आ गई.
कहाँ बोल रहे हो? कहाँ घुसे तुम? हेलो? अरे हेलो?
बड़ा शहर, बड़े खर्चे.
कितनी बार बोल रहे हमारी बात तो पूरी किया करो. तुम पूरी सुनते ही नहीं. सवाल जवाब कर रहे हैं. समझ में नहीं आ रहा है. बस हो गया. तुम आ जाओ भाग के यहाँ पर.
क्या बात कर रही हो भगवान? भाग के?
अरे तुम हम बोल रहे हैं तुम आए.
दौड़ के कैसे वापस आ जाएं? घुटना टूट गया है. अब जाओ और FD तोड़ो.
बड़े शहर के खर्चे की टेंशन नहीं, इंश्योरेंस लीजिए. ICICI लोम्बार्ड कंप्लीट हेल्थ इंश्योरेंस देता है हेल्थ कवर के साथ नो जोनल कोपे का बेनिफिट, ताकि आप अगर दूसरे शहर में भी हों तो आपके ट्रीटमेंट में कोई कमी ना हो. ICICI लोम्बार्ड कंप्लीट हेल्थ इंश्योरेंस. टेंशन नहीं, इंश्योरेंस लीजिए.
White shirts, कितने प्लेन और सिंपल. फॉक्स सेंट प्लेन और सिंपल व्हाइट शर्ट को बना दे स्पेशल और फैशनेबल. फॉक्स सेंट, न्यू फैशन वेयर फॉर मेन.
Well, I fear welcome back to Indian Open. I fear that this sell on rally template seems to be firmly entrenched. Look at what the Nifty Bank and the Nifty are doing now. Compare that to what the rest of the Asian markets are doing, and you will see that India started off on a good note, but has completely slipped off. The Nifty Bank is about to break into the red. And just compare this with what the rest of the Asian picture is looking like. So the Nikkei, the Hang Seng, the Kospi, etc. should come up on your screen. They are doing okay. A similar scene happened last week as well, wherein the rest of the world did reasonably okay. Dow went up 4.5%. Our markets refused to move up, and that's seemingly the case in today's session too. Not a great day. The start, the first 1 minute was great. Post that, we've just come off. Anyways, what seems to be doing okay is Ambuja. I'm using that as a cue to move into the next discussion, and that is on cement, because the sales showed an uptick in the last 3 months of 2017. However, it's not translated into the best of margins. Sure, there are a couple of exceptions, and there are exceptions to the rule of growing sales and lower margins too. Companies like Sanghi, for example, didn't have a great top line, but the cost squeeze probably helped them on the bottom line. So let's talk about all of that and more with somebody who tracks this space very, very closely. Murtuza Arsiwalla of Kotak Institutional Equities joins us right now on the show. Murtuza, great having you. Thanks so much for speaking to us at BloombergQuint. What did you make of the December quarter for the cement companies?
Pleasure. So essentially, if you look at the quarter, obviously the headline volume growth numbers were pretty fantastic. If I look at the industry data, you were talking of almost about 11% growth. Even if we adjust for the demonetization quarter and the fact that there were declines in the same time last year, your 2-year CAGR is still about 6% plus, which is far better than the low single digits that you've seen in terms of cement volume growth for the last few years. So fairly good volumes coming through. Unfortunately, the good news sort of stopped out there because almost across the board you had price declines. You had a Ultratech which had a very aggressive and healthy ramp up of the acquired capacities from Jayaprakash, possibly came at the cost of prices. Again, different regions behaved differently. South was more impacted, but overall price trends were weak. On the cost side, petcoke was already being painful. There was a temporary ban during the quarter, plus a revision in import duties, which came in the latter part. The full impact of the cost will actually come in the following quarter. But so you had, if I were to broadly sort of summarize the quarter, it was of very strong headline volume numbers, still good underlying sort of volume trends, weak on pricing, weak on profitability.
So, and did the commentary or your channel checks with any of the companies or dealers suggest that this kind of volume growth, if not in the same vein, but in a similar area of sorts, continue until the monsoon kicks in?
So again, see, the demonetization base that is there will continue in the fourth quarter as well. So the Jan-March period will benefit from that. The underlying volume trends, like I said previously, also appear healthy. And hopefully, with the Supreme Court intervention on the sand mining issues, so the drag, the additional drag which was there in South India possibly sort of does away. So hopefully the volumes, if not at the same sort of pace, but still continue to be healthy. So far, pricing, in the Jan to March quarter, it is better than where we were, but not meaningfully, not far from, the kind of price activity that you see in this busy construction season.
There was a big decision taken yesterday, formalized yesterday, if you will, Murtuza, about commercial coal mining as well. You referred to cost squeeze or cost pressures being a key component in the quarter gone by as well. How do you think that equation shapes up over the course of the next 12 odd months, if it's possible to predict that, and if this commercial mining can have any kind of immediate impact on costs for the cement companies?
So definitely not. It's a good decision to liberalize rather than keep monopolies. But it is more of a long-term decision. They've not identified coal mines or the quantum of resources they're gonna put out there for the auction. The auction possibly happens over the 12 to 18 month period. The coal mining or the benefit of that another 2 to 3 years out. So nothing that impacts cement in the near term. Again, I would be skeptical that cement players, even though they have the experience in mining, I don't think they would possibly be looking at getting into commercial coal mining per se.
Okay. Now, what did you like in the December quarter? What didn't you like and why? I mean, to my mind, I thought the headline numbers for both Ambuja and ACC looked very, very strong. For the others, they all seem mixed. But what is your opinion? What stood out for you?
So ACC and Ambuja did stood out in terms of their headline volume numbers. It also helps that Ambuja is the only one amongst the sort of frontliners who do not have a South exposure, and pricing in South was weakest. So clearly Ambuja and ACC did stand out. Ultratech did stand out for the pace at which they ramped up the Jayaprakash assets, the acquired assets of Jayaprakash. So these three definitely did stand out. One also though needs to bear in mind that ACC and Ambuja have a larger sort of retail sales presence, which was more impacted in the base quarter. Not taking away that even adjusting for that, it's a healthy performance, but you would want to take into consideration that, relative to peers, they did take it on the chin same time last year, and that's what the benefit, is sort of getting inflated in this quarter.
Okay. What about southern companies? I was looking at the data compiled by Nikki. Volumes weren't the best for the southern companies compared to the rest of the peers, and I heard you mention that pricing for the southern companies also was the weakest. What does an average investor do?
So essentially, to my mind, and it's really a long call, but to my mind, things bounce back. The southern companies, especially more Tamil Nadu exposure, was impacted by the sand mining issues, which meant that demand was sort of taken away, and it had a corresponding bearing on the pricing as well. If you look at some of the numbers out there, their profitability at a few years low. So the lowest in the last 3 or 4 years. And so to that extent, my gut feel would be a bounce back. But that has not happened just yet. You've seen some improvement in pricing in Jan, which has held through in February, but not of the order that would sort of make things far more happier. But then with the sand mining ban just having gone, maybe things the momentum sort of picks up in terms of volumes and also extend itself into better prices. So I would expect things to sort of bounce back for southern companies. They've definitely had the worst of the quarters compared to other regions.
With an immediacy or with a bit of a lag?
Well, hard to tell on a monthly basis how things behave, but I would expect things to sort of bounce back even by March, April.
By March, April, okay. So would it be fair to assume, Murtuza, that if an institutional investor is size agnostic, the southern companies offer a better bang for the buck compared to even the pan-India players or some of the other regional players? Or is my assessment wrong?
So tricky one out there. I mean, yes, the momentum in the near term will favor the southern companies. Their valuations are more, the regional players on a valuation metrics are also relatively more cheaper. So in that sense, yes. But again, it's hard to tell. For instance, if you look at volume trends per se, East has been the one which should have been consistently positively surprising with very, very strong volume growth. So one cannot rule that out. North seems to be sort of somewhere in between. Volumes are all right. They are more sort of predominant users of pet coke, and even though the ban's sort of revoked, pet coke prices are still on the rise. So that's something that's going to affect the industry at large. But yes, to an extent, yes, South does look a better place to be in the immediate term, given that they've sort of been at the bottom of the rung in the quarter gone by.
Murtuza, your conversations with managements, I mean, do they convince you enough that a larger volume recovery play might be in the offing over the next couple of years? I mean, we've been hearing about this whole impact that the infra push will have on cement for a really long time, or the housing push will have on cement for a really long time. It's translating in only bits and spurts into specific pockets, but not an industry-wide phenomenon. Can we see something of that nature happening over the course of the next 12 to 18 months?
Well, so management commentary has always been, in a quarter like this where volumes are sort of reflecting some underlying growth, management commentary does sort of turn more positive or more optimistic. But I guess, as has been the experience in the past, the government push has been there in bits and spurts. Management commentary does turn optimistic every time they do see some recovery, but we've not seen that be a consistent sort of flow. Something that was the case, let's say 5-7 years ago, where you had consistent healthy volume growth, high single-digit sort of volume growth. We have had a good quarter. There's no doubt about it. Volumes are looking better. If you look at the utilizations for ACC and Ambuja, which are calendar year companies, they have shown some momentum. Forget the underlying of, the base effect of demonetization or the quarterly impacts, but they have improved their full year performance after a long, long time. So yes, there is some amount of buoyancy. Whether that is continuing, the momentum's built, a little hard, a little still early to tell, but yes, the signs are there.
Okay, so final question, Murtuza. I mean, are you a buyer, or I mean, if you were allowed to, or whatever it is, how are you recommending your clients? Are you recommending them to invest fresh capital, large capital, fresh at these levels, and what's the pecking order like?
So we've been recommending Dalmia for a while. We continue to remain positive on the stock. Grasim Industries is another play. While it's a conglomerate, but it's a direct play on Ultratech, and our preference for Grasim over Ultratech really comes through the holdco discount and the valuation comfort that Grasim sort of offers. And yeah, the price point's far more attractive than, let's say, what you would have seen a quarter or 2 quarters ago, and that sort of remains more neutralish on ACC Ambuja given where the valuations are.
Okay. Great. Murtuza Arsiwalla, many thanks for joining us today. Pleasure speaking to you, and look forward to speak with you more often.
Pleasure. Thank you.
That's Murtuza Arsiwalla of Kotak with his thoughts on the cement space. Maybe a few select names, but otherwise didn't seem to suggest that as a compelling buy out there. By the way, as we speak, the index has slipped into the red. The Nifty is in the red after starting off over 0.5% higher. It just spells out how the market or how participants are feeling about the market. Every rally, however small or large it is being sold into. The Nifty Bank leading the charge downwards, 32 points off, about 0.13%. I would guess the mid caps and the small caps too have come off. I don't know what Nifty IT is doing. That's the next conversation. But IT started off on a really good footing. Is it still staying strong? Yes, Nifty IT is still staying strong. So maybe that's one pocket that seems to be doing okay. Let's talk about that pocket with none other than Anand Deshpande. Remember, NASSCOM guidance 7 to 9%. The conversation to him, of course, would be whether the listed peers and the larger names would probably grow higher than the 9% top end guidance that NASSCOM has given. Anand, thanks so much for joining in and speaking to us. Are we amidst green shoots in the IT business, the space at large, not just Persistent? I'll come to Persistent in a bit. How do you see the pocket now as an industry captain?
Overall, the market segments in terms of the customer scenario, I think is pretty good for the industry right now. Overall, the companies that you look at the economy, the tax rebates cuts that you have seen in the US, and in general, the push towards digital means that there is a lot of activity. On the technology segments also, some of the changes around artificial intelligence and some of the new things that are happening around the newer technologies is definitely creating lots of opportunities in the market. So I'm quite optimistic about the new business that is coming in.
Okay, so in which case, is this 7 to 9% band is for the slower companies, and do you believe that companies like yours will grow faster and better than this 9% top end?
Yeah, absolutely. We all expect to do a lot better than that. See, the challenge has not been, at least for us, the bigger challenge has been in the last few years has been the attrition on existing business, and partly driven by the fact that the effort required for the same work is going down. In terms of new business opportunities, the opportunities have been very good. The challenge in terms of the growth rate has been, is the growth enough to backfill the attrition that you see in an existing business because of the changes in transformation? So that's been the main challenge. And I think people are very optimistic, including us, in terms of the new opportunities that exist. And if we can move that fast enough, then I think it'll be good for the industry.
Mm-hmm. Okay, let's talk about Persistent specifically and short term. The services business, a lot of people write about it having turned the corner and will continue to grow. What are your thoughts here?
No, absolutely. So we are on a transformation journey. I think one of the main differences that we are starting to see why the turnaround has happened is some of the existing services accounts are also looking at us as a partner for their digital business in some sense. Everything is starting to become digital. And I think by and large in some of our largest accounts, the attrition on accounts in terms of the traditional business that we had, pretty much we are at the last parts of that still going to happen. But, we start to see more positive numbers on existing accounts than dips that we have seen in the last 3 years.
Okay. Oh, so you spoke about attrition a couple of times now. Does this attrition in larger accounts or the existing accounts last for longer than a 1 year period?
I think it'll take about a year. I would give it one more year in terms of the attrition. See, it's like this, right? We are balancing the dips in existing accounts with new business that we are trying to get. The velocity of new business actually determines how fast we can move. What is most optimistic is the fact that the new business opportunities are very good. And the second thing is that the dips that we know are going to happen in our existing business, there's less of it left right now. So we are quite optimistic of the difference starting to benefit us. But it's a journey. It's not going to happen very quickly. But I think things are trending in the right direction for sure.
The deals in your digital business got pushed out. If signed in Q4, would they help drive acceleration in revenue growth quarter on quarter?
Correct. So I don't want to give out any numbers at the moment, but we have a big uptake in our Q3 number predominantly because of the IP revenues that we get from our largest customer. So that number is the number we have to fill in, right? So while we will do well on the digital side, we know that there is a set of businesses that we had which have a one-time or a yearly annual situation on calendar year end of calendar year. So we had a good quarter last quarter, partly because of many of the deals that we signed with our largest customer. That is going to be not there in this quarter. So that makes this quarter harder than it would be. Overall, as I said, the new things that are coming in well. But how much of it can we fill in from the gap from the previous quarter is still hard to determine at this time.
Do you expect to generate revenue from the reseller relationship you have with IBM in a meaningful way as it goes to customers directly? Because I believe you've added senior personnel in Europe to drive growth in that region as well, which should probably help the IBM business too. Could you elaborate on this?
No, clearly, see, as I've pointed out in the past as well, what I see at this time is the fact that there are new shoots that in terms of new opportunities that we are starting to see. And I think this is for us the time to invest in sales and marketing. So without necessarily saying what would happen to the profitability because of that, the fact is, I think this is the time to invest in sales. And you would see more increase in sales and marketing from our side in the next 12 months. And that should have a long-term better effect right now. We had also added significantly on the European side with some executives that we have been able to get from our biggest partner. And Mike Kuklenko, who already joined, we announced. There's some more people who will join. But for the next financial year, I'm definitely looking at investing more in sales and marketing as a real specific, plan for next year. And, that will usually have a lead time, meaning it will take a 2-quarter lead in terms of lag, in terms of getting the business to come in after you've added the salespeople, which might have an impact on the profitability for some time. But I think this is the time to invest in sales. I'm feeling pretty good about the offering that we have and what we can sell. So now is the time to go sell.
Okay. So if that is the strategy, would margins take a hit?
Yeah, that's the whole point, right? Meaning, but it's like this. Unless you invest in sales, you're not going to see the growth happen. So at this point, we are in a stage where we think we have enough things to sell. So, the best opportunity right now is to go sell. And over a year's period, of course, they should catch up by the time, it takes 2 quarters for a new salesperson to be effective. But, you got to start somewhere.
Okay. Slightly long-term questions, Anand, before we wrap up this interview. Last two. One, is it possible to contemplate a 12 to 14% revenue growth YOY CAGR for the next 2 or 3 years till FY21? A clutch of brokerage reports seem to be suggesting that.
No, see, I don't want to comment on the numbers specifically, and I think there are many wise men around us, so I don't want to say how these numbers come through. We are definitely pushing higher growth on a quarter-on-quarter basis for the business, and we think that if some of these IP revenues actually start to kick in, then you will see some better growth. So I don't want to deny these numbers, and neither do I have any real way of substantiating them. The fact is that there is a lot of uncertainty right now, and I'm not thinking beyond 2 quarters at a time. But as I said, right now my focus is that I think we have enough things to sell. Let me go add more salespeople, get all salespeople to move to sell what we have. And if sales happen, which you will know in 2 quarters, 3 quarters from now, that should play for itself, right? Growth rates, everything is all related to sales at the moment. So far, we were not sure what we would sell and how we would sell. We think we are in a better position to decide. We have clarity on what we can sell right now. So that's the main positive that I would say right now.
Okay, but if I can just dwell on that point, Anand, if indeed the strategy is to go out and sell, would margins stay at the current levels instead of moving up over the next 18 to 24 months?
Let me see how we go along. We are not going to go crazy on this. We are definitely trying to improve margins. The new business that we get, we are trying to sign up at better rates. So I think you have to look at it in multiple sub-segments rather than looking at it as one number at the end of it. And if you look at, I think this is the right thing to do right now. We have to invest in sales at the moment, potentially at the compromising a little bit on the total margin. But the key to remember is that if we are getting new business at the right set of margins, that will help in improving the margin overall. So it's a quarter-on-quarter dance that we will look at from our staffing and planning perspective. But yes, if you look forward, hopefully the sales team will deliver, and that's what we are counting on.
Okay, Anand Deshpande, thank you so much for taking the time out and speaking with us today on Indian Open on BloombergQuint. Much appreciate you being with us. That's Persistent Systems with their thoughts. Will definitely invest in new businesses and volume growth, even if it comes maybe at a slight cost of margins, but hopeful that margins will not get eroded. Markets lying absolutely flat, but Nifty IT is that sole space, or seems to be one of the key pockets that is trending higher. There is strength in ITC and Ambuja Cements, but IT is really the key pocket. Both large cap and mid cap doing much better than what the rest of the market is. Commodities are taking a hit today. Likes of Hindalco, Coal India, Vedanta are all coming off in the session today. Wrap it up on this leg of Indian Open. Up next is the FNO show. Stay tuned to BloombergQuint.